Welcome to the secret world of finance. You might think of finance as, just numbers and markets, stocks and bonds. But today, we're embarking on a really fascinating deep dive. We're looking at where the most personal decisions made. I mean, things like choosing whether or not to start a family actually have these profound financial ripple effects across entire societies.
Yeah, and often in ways we don't immediately see or maybe don't fully grasp the scale of.
Exactly. The connections are subtle, but incredibly powerful.
What's truly fascinating here, I think, is how these seemingly slow-moving population trends, things like declining birth rates and aging global population, they almost feel like background noise sometimes, right? But they're quietly generating these tectonic forces beneath the surface of our economies.
Tectonic forces, that's a good way to put it, not just small tremors.
No, absolutely. These forces aren't just theoretical models for economists. They're impacting everything. We're talking national budgets, the long-term stability of pension systems, even individual household investment decisions, how you save, what you invest in, and maybe even the very nature of work itself is changing because of this.
Right. We've pulled together some really incredible sources for this deep dive today. Our research includes a detailed study looking at Finland's quite innovative approach to economic sustainability, especially given their plummeting fertility rates. We've also got in-depth analyses of how household portfolios, people's savings and investments are actually adjusting to these shifts.
And we've also looked at broader global perspectives, trying to get a handle on the wide-ranging economic and societal impacts of these huge demographic changes.
Exactly. So our mission today is to really unpack these complex interconnections. We want to expose some of the hidden financial challenges they present, maybe shine a light on things people aren't thinking about day to day.
And also explore some potential solutions, right? Some of which are actually surprisingly effective, maybe moving beyond the sort of conventional thinking about demographics.
Absolutely. Okay, let's get into it. So you might still hear people talking about the global population growing, and technically in absolute numbers, that's still true for now. But here's where the first layer of this deep dive reveals something really counterintuitive.
Yeah, this is key.
While the total population has indeed more than doubled since the 1960s, a massive increase, the rate of that growth, the speed at which we're adding people, has been consistently falling for decades now.
Pretty much that entire time, yeah.
So we're not just slowing down, we are witnessing a fundamental, pervasive shift. And it looks like it's probably permanent. We're talking low fertility, widespread population aging, and eventually actual depopulation across a vast majority of the world.
It really is a demographic transformation unlike anything else we've seen in recorded history. The scale and speed are just unprecedented.
Okay, so let's connect that to the bigger picture. What does that actually mean globally?
Well, it means that even though the global population is projected to peak somewhere around, say, 9 or 10 billion people, probably sometime between 2060 and 2080, give or take.
Which still sounds like a lot of people.
It is a lot of people. But the crucial point is that after that peak, the overwhelming majority of countries simply will not be able to sustain their current population levels by the end of this century. The momentum shifts dramatically towards decline.
And this isn't just some abstract model, right? You said the numbers are stark for individual nations.
Oh, incredibly stark. When you look at the projections country by country, it paints a really vivid picture of future contraction. It's not theoretical anymore.
Give us some examples. Just how stark are we talking?
Okay, well, consider China. Currently the most populous country, right? Projections indicate its population could be less than half its current size by the century's end.
Half. That's,
Yeah.
I mean, that's a loss of something like 800 million people.
Exactly. 800 million. Try to actually visualize a demographic shift of that magnitude happening within just a few decades. It's almost impossible to really grasp the implications.
And it's not just China, is it?
Not at all. It's widespread. We're looking at South Korea's population potentially shrinking by a staggering 63%. Poland and Japan possibly cut in half. Italy and Thailand looking at drops around 44%. The entire region of Eastern Europe could shrink by an estimated 40%.
Wow. Okay, so these aren't minor adjustments. These are fundamental large-scale contractions. They're going to reshape societies and economies completely from the ground up.
Absolutely. And what's particularly striking, I think, is that this isn't exclusively a developed world issue, which is maybe the common assumption.
Right, you think of Europe, Japan.
Exactly. But the phenomenon of collapsing fertility rates is truly global now. We're seeing it everywhere, including in countries often considered still developing or in transition. For example, Turkey and Tunisia, their fertility rates are now actually lower than the UK's.
Lower than the UK. Okay.
Yeah. Yeah. And Mexico's fertility rate has dipped below that of the United States. So this broad global decline really suggests that the underlying causes are systemic. They seem to transcend traditional ideas about economic development or geography or even specific cultural or religious practices.
Which points towards some kind of universal challenge, right?
hmm
Something countries with vastly different wealth levels and social structures are all grappling with simultaneously.
Precisely.
So that obviously begs the big question, why? Why is this happening? Why are people across all these diverse cultures and economic landscapes choosing to have fewer children?
Yeah, it's definitely not a single simple factor, if only it were that easy to pinpoint.
Right. It seems more like a complex, really tangled web. You've got financial pressures, rapidly changing societal values, maybe even the subtle, pervasive influence of our increasingly digital lives playing a part.
It touches everything, doesn't it? From the cost of rent, individual career aspirations, how we connect or don't connect with each other in this digital age.
Okay, let's try and untangle that web a bit. Where should we start? Maybe the financial barriers. They seem pretty immediate.
Yeah, let's start there. They're arguably the most immediate and tangible reason for many households. I mean, the sheer cost of raising a child today is a primary deterrent.
Do we have numbers on that?
We do. Data from the UK, for instance, reveals it costs roughly £200,000. That's about 254,000 US dollars just to raise one child from birth until they turn 18.
Wow. 200,000 pounds before university.
Exactly. And that figure doesn't even begin to account for university education or, any other post-18 financial support. It's an enormous sum for almost any family to contemplate.
Put that in perspective. Imagine trying to save $250,000 after tax just for one child. Before you even think about tuition fees later on, it really reframes the decision, doesn't it? It becomes a massive financial commitment.
It absolutely does. It profoundly impacts individual decisions about whether to have children at all, and certainly how many they feel they can afford to have.
And when you dig into the specifics, the picture gets even clearer, I suppose. Housing must be huge.
Monumental. Housing costs, especially in urban and suburban areas where most jobs are a massive burden. They're effectively pushing back the age at which young adults can achieve any kind of financial stability, let alone buy a home or even think about marriage and starting a family.
That whole dream of the white picket fence seems to be getting further and further away for many.
It really does. And then you layer on childcare costs.
Oh yeah, childcare. Astronomical.
Astronomical is the right word. In the U.S. alone, the average cost of full-time daycare shot up by an astonishing 51.8% in just 2 years recently. It reached an average of nearly $18,000 a year.
$18,000. I mean, that's practically like paying a second mortgage for many families.
It really is. And let's not forget the student debt burden. It's pervasive. It's crushing for so many young adults. It delays financial independence, makes it incredibly difficult to even consider major life milestones like buying a house, getting married, having kids.
It's no surprise then, is it, that studies show a big majority, something like 73% of young adults, cite economic factors as the main reason for delaying marriage.
Yeah, and even the wedding itself is a hurdle. Averaging around $30,000 in the U.S., it all adds up.
It really paints a picture where, for many, deciding to have children has shifted, hasn't it?
Yeah.
From what used to be maybe a natural life progression to, well, a significant financial calculation, almost like a luxury good, accessible mainly to those who are already financially secure.
That's a stark way to put it, but there's definitely truth in that. And this ties neatly into something economists call the income effect.
Okay, explain that.
Well, as incomes generally rise in more affluent societies, so do the expectations for the quality of pretty much everything, products, services.
Right.
And that includes the perceived standards for raising children.
Right, so parents feel more pressure to invest more.
Exactly. Increasing pressure both from society and, internally to invest more time, more money, more emotional energy into their children's education, enrichment activities, their overall development. The goal often becomes providing them with every possible advantage, trying to improve their future chances in the job market.
Which sounds good in theory, but
But as these expectations rise, the lower cost or maybe simpler child-rearing options seem to kind of disappear from the mainstream. It becomes incredibly expensive just to meet the prevailing societal expectations.
so it creates this perceived trade-off.
Precisely. Families often feel they have to choose. Either have more children or provide a really high-quality, high-investment upbringing for the one or two they do have. It becomes a quantity versus perceived quality calculation.
Okay, so the direct financial costs are huge. The expectations are rising.
Yeah.
But you mentioned opportunity costs earlier. That's another big layer, right?
Especially
for women.
Yes, absolutely. Beyond the direct financial outlay, there's this significant layer of opportunity cost. And historically, and often still today, this disproportionately affects women.
How so?
Well, the opportunity cost is substantial. Women frequently face significant trade-offs with their careers, their educational pursuits, even just maintaining their social networks and personal time.
And this plays out differently in different places.
It does, but the core issue is often similar. In regions like East Asia, for example, you have places where women have achieved really high rates of workforce participation, which is great, but they're still often saddled with a very unequal share of domestic work and childcare responsibilities.
The second shift.
Exactly. That demanding dual role, trying to excel professionally while also bearing the main burden of household duties, leads many women to consciously look at that lifestyle and choose to avoid it altogether. They see it as an unsustainable burden that compromises their own well-being and aspirations.
And the research backs this up, you're saying. Women's priorities are shifting.
Undeniably. For women, studies indicate a growing interest in career fulfillment, personal growth, cultivating friendships. These things are playing a more significant role in their identity compared to perhaps previous generations where motherhood was seen as the primary role. This is especially true for those who feel less bound by rigid traditional expectations.
What about men? Are their reasons different?
Often slightly different emphasis, but equally complex. For men, the decision to delay or forego parenthood is often heavily driven by those financial concerns we talked about, especially student loan burdens. But there's also a growing anticipation of greater conflict between their work and family roles.
Why is that?
Well, it's partly because young men and women today increasingly expect truly egalitarian partnerships in parenting. Both want to share responsibilities equally, which is, inherently positive and admirable.
I buy it.
But paradoxically, this desire for fairness can actually make family formation seem more daunting. Because successfully balancing these shared, demanding roles is incredibly challenging in practice, given current workplace structures and lack of support.
That's fascinating. So the move towards equality actually makes the prospect seem harder in some ways.
It can, yeah. There was a really striking example of this shift in a Wharton study. It revealed that the percentage of their students planning to have children plummeted. Plummeted from around 79% back in 1992 down to just 42% in 2012.
Wow, nearly halved in 20 years among that group.
Exactly. That's a seismic cultural shift right there. It reflects a profound reevaluation of life priorities among younger, educated generations.
Okay, so we have financial pressures, opportunity costs, changing expectations around partnerships. What about other cultural shifts? You mentioned the digital era.
Yes, the societal reevaluation leads us to ask about those deeper, maybe more subtle cultural shifts, especially in our hyper-digital world. And the research strongly suggests that the sheer proliferation of smartphones and pervasive social media use is a huge and maybe often overlooked factor. It seems to be profoundly influencing these demographic changes.
How so? What's the connection?
Well, here's where it gets truly captivating, I think. Studies are broadly tracking the rise of mobile internet usage and social media engagement and finding correlations with a noticeable decline in traditional coupling rates among young people.
So less dating, less partnering up.
It seems that way. The way young men and women consume often very different content online and their increasing preference for, staying home, scrolling through feeds, playing video games. It seems to be fundamentally reshaping face-to-face social dynamics.
Instead of going out, meeting people, forming relationships.
Exactly. Instead of actively meeting up, building community, forming those crucial bonds, many seem increasingly absorbed in their digital cocoons. The effort required for real-world interaction might feel higher, or the digital world just more immediately rewarding, perhaps.
And this has broader consequences.
Some researchers are calling it a silent epidemic of despair, driven by this growing social isolation. It manifests in worrying ways, rising rates of anxiety, depression, other mental and physical health issues, all seem to correlate at least partly with the rise of digital culture and increased screen time.
That anecdote about Google searches is quite telling, isn't it?
It really is. The fact that "how can I learn to love myself" became a top Google search suggestion. It highlights this poignant, almost heartbreaking symptom, a societal shift towards introspection, maybe self-isolation, rather than primarily seeking connection with others.
And yet that human connection is so vital for well-being.
Absolutely critical. There was a paper in Nature Medicine that underscored this powerfully. It found that while, yes, exercise and wealth are life-expending, living with a partner is actually almost as beneficial as regular exercise in terms of longevity.
Wow. almost as good as exercise.
Yeah.
That really emphasizes the importance of genuine human connection, that bond that maybe seems to be eroding a bit in our digital lives.
It does, and that leads us right to a critical point about policy. If young people aren't finding partners or are actively choosing not to couple up in the first place because of these deeper social and digital factors, then simply providing financial incentives for fertility, like baby bonuses,
It might be missing the point.
it might very well be putting the cart before the horse, as the saying goes. You can offer all the tax breaks you want, but if the foundational social connections aren't there, or if people are opting out of partnership and family life for these more profound reasons, those incentives are likely to fall flat.
It's like trying to water a plant that's already lost its roots. The money doesn't fix the underlying issue.
Exactly. It doesn't address the root cause.
Okay. So let's pivot now from the individual choices and the why behind them to the broader economic landscape. What are the big financial implications of having fewer young people entering the workforce and this rapidly growing proportion of older people?
They're profound, especially for things like national budgets and, critically, the stability of pension systems.
Ah, yes, pensions. The elephant in the room.
It really is. Most developed countries operate on what's known as a pay-as-you-go model, or PAYG. You can think of it like a generational contract.
Today's workers pay for today's retirees.
Essentially, yes. The contributions from people working now directly fund the benefits being paid out to people who are retired now. The huge challenge is that contract is now under immense, really unprecedented strain.
Because the balance is shifting.
Dramatically. The mathematics of these PAYG systems simply becomes unsustainable as populations age, and that critical ratio of workers to retirees shrinks.
Do we have historical comparisons?
We do. Think about post-war Europe. Back then, you had roughly 8 workers contributing for every 1 retiree drawing benefits.
8 to 1, okay.
Today, in many Western European countries, that number has plummeted. It's down to only 2 workers for every retiree.
2 to 1, that's a huge drop.
It's massive, and the projections are even more alarming. By 2070, the old age dependency ratio in the euro area is projected to reach almost 54%. That means roughly 1 working age person for every 2 people over 65.
1 worker supporting 2 retirees.
Mm-hmm.
And what about specific countries? You mentioned Italy earlier.
Italy is an extreme example, but illustrative. By 2050, projections suggest it could drop to just 0.88 workers for every person over 65. Less than 1 worker per retiree.
Wow. That's historically unprecedented, you said.
Completely unprecedented. It puts an immense, truly unsustainable burden on fiscal policy, on public finances. It fundamentally demands radical restructuring of these systems to avoid potential collapse down the line.
And Finland, which you mentioned as one of our sources, they're facing this too.
Very much so. As one of Europe's fastest aging countries, their earnings-related pension system is only partially funded. It's heavily dependent on demographic developments and what's called the total wage sum, basically, the total amount of money earned by all workers in the economy.
So if fewer people are working and earning,
and more people are drawing pensions, the entire system faces severe pressure. It's a really stark reminder that these aren't just abstract numbers on a spreadsheet. They represent real people, real livelihoods, and financial systems that are potentially on the brink and need significant reform.
okay, so pensions are under massive strain. What about beyond pensions? What other economic drags are there?
Well, beyond the immediate pension crisis, an aging population and declining birth rates act as a significant and persistent drag on a country's broader economic potential.
Like what?
We're talking about comprehensive workforce shortages across various industries. You see it already in healthcare, manufacturing, technology, skilled trades.
Finding enough workers becomes a major challenge.
A major challenge. There's also a potential dampening effect on innovation. Innovation is often spurred by the energy, the fresh perspectives, the kind of risk-taking associated with younger workers entering the field.
So less dynamism potentially.
Potentially, yes. And furthermore, an aging population typically leads to reduced overall consumer demand. Older individuals generally consume less, especially of durable goods, compared to younger, growing families who are setting up households, buying cars, raising kids. That slowdown in aggregate demand can act as a brake on overall economic growth.
Okay, that brings us to a crucial question then. Productivity. How does an aging workforce actually impact productivity? Is it inevitable that it declines?
That's a really important question. The relationship between age and productivity is often described by economists as being hump-shaped,
Up-shaped, meaning.
meaning it tends to rise as workers gain experience and accumulate skills and knowledge. It peaks somewhere in middle age, and then it tends to moderate or potentially decline in very advanced working ages.
Okay, so some decline might be expected.
It might be, however, and this is crucial, this isn't a static or inevitable outcome. There are several factors that can significantly mitigate this or even counteract it.
Such as?
Well, for instance, older cohorts today often possess much higher education levels than previous generations did at the same age. Also, improving health conditions and advances in healthcare mean people can remain productive and engaged for longer than ever before.
And policies can help too.
Absolutely. Forward-thinking structural policies can make a huge difference. Things like investing in age-specific equipment, designing more ergonomic workplaces that cater to older bodies, or actively fostering age-diverse teams within companies mixing younger and older workers can help maintain or even boost overall productivity across different age groups. Experience plus new ideas can be very powerful.
Are we seeing countries adapt already?
We are. You can observe real-world examples of quite ingenious adaptation, especially in countries that have been dealing with this demographic shift for longer. Japan is a prime example.
Right, they've been aging rapidly for decades.
Exactly, and partly out of sheer necessity, Japan has been at the forefront of adopting industrial robots and advanced artificial intelligence solutions. They're using technology very deliberately to compensate for their shrinking labor supply issues.
So it's a proactive embrace of technology.
Very much so. It demonstrates that innovation can provide crucial answers to the challenges posed by a declining workforce. It's a clear signal that technology isn't just about boosting efficiency anymore. It's becoming essential for societal resilience in the face of these demographic headwinds.
Okay, that makes sense. Now, what about wages? How does this demographic shift impact what people earn?
Wages. Yes, this demographic shift also has pretty profound implications for wages, which then obviously reverberate through the entire economy, impacting inflation, purchasing power, everything.
How does that work?
There's a theory called the cohort size effect. It suggests that a larger cohort, think of the baby boomers who are now entering retirement, can actually depress wages for that specific group throughout their careers. Why? Because there's simply more competition for jobs among people of the same age.
Okay, so bigger generation, potentially lower wages for them.
Potentially, yes. Conversely, smaller future cohorts entering the workforce, the generations following the boomers, might find themselves with increased bargaining power. Fewer workers relative to demand.
Which could push wages up.
Exactly. It could lead to upward pressure on wages and consequently potentially feed into higher inflation. Some economists have even dubbed this potential shift the Great Demographic Reversal.
The great demographic reversal, meaning a shift away from.
A shift away from the deflationary or low inflation pressures we've seen in recent decades. Those pressures were partly fueled by a huge expansion of the global labor supply, especially from places like China joining the global economy. Now, as fewer workers enter the market in many countries, and as the demand for services, particularly care services for the elderly, increases, the balance of power might shift.
Pushing up the cost of labor and maybe the cost of living more generally.
That's the potential dynamic, yes. It's a complex picture, but demographics are a key part of it.
Okay, let's shift focus slightly again. What about capital markets? How does all this affect saving, investment, financial assets?
Right, the demographic transformation definitely impacts capital markets in a fundamental way, too. There's a well-known theory called the life cycle theory of saving.
Okay, what does that predict?
It predicts that working-age individuals tend to accumulate assets for retirement. They save diligently, building up their nest eggs, investing in stocks, bonds, property, etc.
The accumulation phase.
Exactly. However, once they transition into retirement, these individuals typically begin to desave. They start drawing down their accumulated assets to cover their living expenses when they're no longer earning an income.
The decumulation phase.
Precisely. So as the proportion of retirees in the population grows significantly, this systemic shift from widespread saving to widespread dissaving could, in the long run, depress the overall demand for financial assets.
Potentially impacting market valuations, investment returns.
Potentially, yes. It creates this dynamic tension playing out between generations. One large generation saving less or dissaving, while smaller subsequent generations are saving, but perhaps not enough to fully offset the outflow.
That's fascinating. And you mentioned something earlier about the natural rate of interest. How does aging fit into that?
Yes, this is a really interesting connection. Population aging also seems to contribute to a lower natural rate of interest.
Remind us what that is again, simply.
Simply put, it's the theoretical real interest rate. So, adjusted for inflation, that's consistent with an economy operating at its full potential while maintaining stable prices. Think of it as the economy's ideal cruising speed, interest rate-wise.
And demographics are slowing that cruising speed down.
It seems so. Estimates for the euro area, for example, show that this natural rate has fallen significantly. It was over 2% back in 1999, but it fell to even below zero prior to the COVID-19 pandemic.
Below zero. Oh.
Yeah. And while various factors are contributing to this decline, like slower productivity growth, maybe global savings patterns, the shrinking labor force due to demographics is projected to become the main driving force pushing this natural rate lower in the long term.
What are the implications of a lower natural rate?
It has profound implications. For central banks, it makes it much harder to stimulate economies using their traditional interest rate tools when rates are already so low. It basically reduces their policy firepower. And it shapes the overall economic environment we live in, influencing investment decisions, borrowing costs, everything for potentially decades to come.
But wait, you also said retirees spending down savings could push up market interest rates. How do those two things reconcile?
Good question. It highlights a real tension. On one hand, the fundamental natural rate might be pushed down by the shrinking workforce and slower potential growth. But on the other hand, the actual market interest rates we see day to day could face upward pressure in the coming years as that large cohort of baby boomer retirees start selling assets and spending down their savings.
So dissaving pushes demand for funds up, potentially raising market rates, even if the underlying natural rate is low.
Exactly. It creates this dual challenge, this complex dynamic. And ultimately, it highlights the pressing need for governments to figure out how to fund senior benefits. It likely means considering politically tough options like increased tax rates or potentially lower pension payouts, unless societies can find new, innovative ways to generate more wealth and productivity with a smaller, older workforce.
It really is a complex fiscal puzzle with no easy answers, is it?
None at all.
Okay, so if societies are truly facing these massive, interconnected financial and economic challenges stemming from demographics, what are governments actually doing about it? And maybe the million-dollar question, is any of it working?
Right. Well, we've certainly seen a wide range of policy responses across the globe. They range from quite direct financial incentives, basically trying to encourage people to have more babies, to broader, more systemic structural reforms.
Let's start with the direct incentives, the baby bonuses. How's that going?
The track record for simply throwing money at people to have more babies is, frankly, not great. It very rarely works as a standalone solution, especially for reversing long-term demographic shifts.
Can you give examples?
Sure. South Korea is a stark one. They've reportedly spent an astonishing $210 billion over the last 16 years trying desperately to raise their fertility rate.
$210 billion. And the results?
Keep hitting record lows. Their fertility rate is currently averaging under 1 child per woman, way below the replacement level of about 2.1.
So massive spending, virtually no impact on the trend.
Pretty much. Similarly, Singapore. They offer some of the world's highest child benefits, generous monthly payments, tax relief, etc., up to $740 monthly in some cases.
And their fertility rate?
Also critically low, just 1.1 children per woman. So this evidence really strongly implies that financial incentives alone just cannot overcome those deeper, more entrenched cultural, social, and structural barriers to family formation that we talked about earlier.
It seems logical. Money helps, but it doesn't change underlying desires or constraints entirely.
Exactly. We see this pattern elsewhere, too. Places like China's Zhejiang province, Russia, Hungary. They've all introduced policies offering lump sums or various tax exemptions. Often they're specifically targeting young women, trying to incentivize them to have births earlier, hoping that translates into more births over a lifetime.
Does it?
The evidence consistently suggests these financial incentives alone fall short. They might slightly influence the timing of births, maybe encouraging some women to have children a bit earlier than they otherwise would have.
Bringing births forward.
Yes, but generally they don't lead to a sustained, meaningful increase in the total number of children a woman has over her lifetime. The overall family size doesn't really change much, so it's a very limited impact on a very deep-rooted problem.
Okay, so if just throwing money at it doesn't work, what does seem to work, are there any success stories, or at least partial successes?
Yes, and this is where it gets really compelling. What does seem to have more effect are comprehensive, multifaceted, and importantly, long-term approaches. Policies that tackle multiple issues simultaneously addressing that complex web of financial, social, and cultural factors that influence family decisions.
So more holistic strategies.
Exactly. Far more nuanced and integrated than simple cash handouts.
Can you give an example of a successful model?
France is often cited as a prime example. It consistently maintains Europe's highest fertility rate, currently around 1.83 children per woman, which is remarkable given the trends almost everywhere else in Europe. Still below replacement, but much higher than neighbors.
Okay, 1.83. How do they achieve that?
By consistently investing a significant chunk of their economy, around 4% of their GDP, into comprehensive family support. And it's not just one policy, it's a deeply integrated, multi-pronged approach built up over decades.
What does that include?
It includes things like universal, high-quality, affordable childcare from a very early age, like age 3, incredibly generous parental leave policies for both parents, which can extend up to 3 years in total, progressive family allowances that actually increase with the number of children you have, and significant tax benefits designed to help families with children.
So it's a whole ecosystem of support.
Precisely. This comprehensive, long-term investment in creating genuinely family-friendly policies has demonstrated meaningful improvements in their fertility rates over time. Studies suggest these kinds of packages can raise fertility by maybe 0.1 to 0.2 children per woman compared to doing nothing, which might not sound like a lot, but in demographic terms, that's actually a significant impact.
Interesting. Any other examples?
Norway provides another compelling case. There was a specific reform there back in 1989-90 that significantly increased child allowances by about $575 annually per child in today's terms.
And what happened?
It resulted in a measurable and sustained increase in fertility rates. Interestingly, the effect was particularly strong among younger unmarried women. This specific reform showed that well-designed, targeted financial support, when it's carefully integrated into a broader social welfare system that already provides a strong safety net, can indeed influence both the timing and the quantity of fertility decisions.
But you mentioned earlier, even Scandinavian models have seen progress stall.
That's right. It's crucial to note that even these relatively successful models, like in France and Norway, have eventually seen their progress in stemming fertility decline kind of level off or even reverse slightly in recent years. It suggests that maintaining these gains requires continuous adaptation, a deep understanding of evolving societal needs and values. There's no one-size-fits-all static solution you can just implement and forget about.
It's a constantly moving target.
Absolutely. So when we analyze these different approaches, the ones that fail and the ones that have some success, it becomes pretty clear that successful policies require several key ingredients.
What are they?
They need to be comprehensive, addressing multiple needs. They require genuine long-term commitment from governments, not just short-term fixes that change with election cycles. They need careful cultural adaptation. What works in France might not work directly in Japan. A strong focus on promoting genuine gender equality, both in the home and in the workplace, seems critical. And providing broader economic security for families, stable jobs, affordable housing is fundamental.
And policies that fail.
They often over-rely on those simplistic financial incentives we talked about. They tend to think only in the short term. Or sometimes they clash fundamentally with evolving cultural norms and individual aspirations, especially women's aspirations. It just underscores the immense complexity we're dealing with.
Okay, so direct family support is one piece, but it needs to be comprehensive. What about other structural reforms, things beyond just family policy?
Yes, beyond direct family support, robust structural economic reforms are absolutely crucial for navigating this demographic dilemma successfully.
Like what kind of reforms?
Well, fostering greater labor market flexibility is key. That means policies like mandatory, well-paid parental leave for both parents, promoting widespread flexible work arrangements and remote work options where possible, and ensuring really ironclad job protection guarantees for parents, especially mothers, when they return to the workforce after having a child.
So making it easier to combine work and family.
Exactly. Housing market interventions are also vital. We talked about the cost barrier. So governments might need to look at comprehensive first-time homebuyer programs, strategically developing more affordable family-size housing options, maybe even carefully implemented rent control measures in high-cost urban areas to ease that financial burden.
And healthcare. We know an aging population needs more healthcare.
Absolutely. Adapting healthcare systems is paramount. This requires strategically increasing geriatric care capacity, more beds, more specialists. focusing intensely on preventive health programs to keep people healthier for longer and reduce future costs, expanding the healthcare workforce, doctors, nurses, care aides, and smartly integrating technology into elder care to improve efficiency, monitor patients remotely, and improve access, especially in rural areas.
You mentioned technology. How significant can digital transformation be in managing healthcare costs for the elderly?
It's becoming increasingly critical. The costs associated with an aging population are staggering, largely due to chronic conditions. You mentioned the stats earlier. 95% of over 65s have at least one chronic condition, 80% have two or more.
And conditions like Alzheimer's are incredibly expensive.
Exactly. Around $49,000 per person per year in treatment and lost wages. This is where digital tools offer immense leverage. For example, artificial intelligence AI and advanced algorithms can now detect critical conditions like sepsis much earlier than humans might. This reduces variation in care, dramatically improves patient outcomes, and saves significant money by preventing severe complications that require intensive care.
What about administrative costs? Healthcare admin seems notoriously bloated.
It is, especially in the U.S., which spends about $1,055 per capita just on admin, the highest among 12 major countries studied. Automation, including things like natural language processing, NLP, basically teaching computers to understand human language can streamline a lot of that paperwork, the billing, the scheduling, freeing up resources.
And staffing shortages. AI can help there too.
It can. AI and predictive models can help optimize hospital staff scheduling, predict patient flows, and reduce the administrative burden on clinicians and nurse managers. This doesn't replace staff, but it effectively expands team capacity by letting humans focus on higher value tasks. So these digital tools empower health organizations to better balance the complex care needs of elderly populations with that critical need for cost optimization. It's about making quality care sustainable.
Okay, that's healthcare. What about pension system reforms themselves, besides just hoping for more babies?
Right. Within the pension systems, one common reform is increasing the official retirement age, trying to link it more closely to rising life expectancy.
Which makes sense mathematically, but
But it's often incredibly politically challenging. We saw the huge protests in France recently when the government attempted to raise the retirement age from 62 to 65. It's a very delicate, often contentious balance between ensuring the long-term fiscal sustainability of the system and securing public acceptance and buy-in. People feel like a promise is being broken.
are there totally different models for pensions?
There are. Singapore's model, for instance, offers a fascinating contrast. Everyone there saves for their own future retirement via a mandatory private pension-like scheme called the Central Provident Fund, CPF.
So it's not pay as you go.
Not in the same direct way. It doesn't rely as heavily on the current working generation's contributions to pay for current retirees. This model, while having its own complexities, highlights the value of long-distance planning and placing more emphasis on individual responsibility for retirement savings. It's a fundamental departure from the PAYG model common in Europe and North America, and potentially more resilient to demographic shifts.
What about immigration? Can that solve the workforce problem?
Immigration policies can certainly play a role, and often do, in helping to supplement the workforce in countries facing labor shortages due to low birth rates. It can fill gaps, bring in skills, but it's often more of a temporary measure, or at least not a complete solution in the long run. Immigrants themselves age, they eventually retire and draw on pensions. And often their fertility rates tend to adjust over a generation or two towards the norms of the destination country. So immigration can help manage the transition, but it typically delays rather than fully solves the underlying demographic challenge.
Okay, so lots of potential policy levers, lots of challenges. You mentioned Finland earlier, and a more innovative approach. Let's talk about that. What did they explore?
Right. This discussion of various policy responses really begs the question. What about truly proactive, maybe even unconventional approaches that go beyond the traditional policy levers we've just discussed? And our deep dive into Finland, remember, one of Europe's fastest aging countries, also experiencing dramatic fertility declines and some stagnation in educational attainment, recently offers a really compelling and potentially groundbreaking strategy. Ambitious investment in human capital.
Human capital, meaning education skills.
Exactly. Education skills, health, lifelong learning, the capabilities of the population.
So how did Finland explore this? What was the innovative idea?
Okay, here's where it gets really interesting and offers a potential paradigm shift. Instead of focusing primarily on trying to force fertility rates back up, which, as we've seen, often doesn't work very effectively or sustainably, Finland tested a profoundly different strategy using a sophisticated computer simulation model.
A simulation model.
Yes, a dynamic longitudinal microsimulation model called ELSI. It allows them to project different scenarios far into the future, looking at the complex interplay of demographics, education, labor markets, and public finances.
And what was the core idea they tested?
The core idea was this. What if, instead of just accepting the consequences of a smaller upcoming generation, we decided to keep the total societal investment in human capital constant despite those declining cohort sizes?
Wait, constant total investment, but fewer people. So that means...
Exactly. It means significantly increasing the per capita investment in education, training, and human development for each individual child and young person in those smaller generations.
So fewer kids, but invest more in each one.
Precisely. It's a strategic decision.
Hmm.
Make each individual in that smaller future generation far more productive, more skilled, more adaptable, healthier. Invest in quality over just quantity.
That's a fascinating reframe.
Hmm.
What did the simulation results show? Did it work?
The results were nothing short of striking. The simulation showed that this ambitious human capital investment strategy can significantly offset the negative impact of having a smaller labor force on that looming pension burden we talked so much about.
Oh.
It does several things. It not only reduces the future pension burden relative to GDP, but it also leads to individuals working longer, more productive careers. They end up earning more, contributing more taxes, and accumulating higher overall pension income for their own retirement. The models even showed an increase in retirement years enjoyed in good health and overall longevity.
Wow, so better individual outcomes and better fiscal outcomes.
Yes. The specific scenario they modeled, the high education investment scenario, projected through this ELSI model, led to more than 10 percentage points higher GDP per capita by the year 2090, compared to the baseline scenario where no additional human capital investment was made.
10% higher GDP per capita just from investing more in education for a smaller cohort. That's huge over the long run.
It's massive. And crucially, the model showed that more than 80% of this projected growth was directly due to higher average wages across the entire workforce. The overall wage sum in the economy shifted significantly towards groups with higher education levels.
So it demonstrates a clear pathway, doesn't it? A highly skilled workforce, even if it's smaller in absolute numbers, can fundamentally boost overall productivity, foster innovation, enhance adaptability.
And directly counter the negative financial effects of demographic decline. It's a powerful, real-world-based example of how proactive, strategic investment in people and human capital can shape a more sustainable and potentially more prosperous future, even with fewer births. It shifts the focus from how do we get more people to how do we make the people we have incredibly capable.
That feels like a much more empowering approach.
I think it is. It focuses on levers we have more control over, like education policy, rather than trying to directly influence very personal family decisions.
Okay, so let's try to wrap this up. We've covered a lot of ground, from personal choices to global economics to innovative policy ideas. What does this all mean for you, the listener, and for the world we live in?
Well, I think the first key takeaway is that the world is undeniably heading towards a grayer future, and in many, many places, a smaller future in terms of population. That seems pretty much baked in now.
Right, the momentum is there. But as we've explored here in the secret world of finance, it doesn't automatically have to be a fearful or negative future.
Exactly. Our collective choices, how we approach family support, how we structure work, and especially, as the Finland example shows, how we invest in education and human potential today will ultimately dictate our economic stability and our societal well-being tomorrow. It really is about adapting proactively to an inevitable demographic shift rather than perhaps fruitlessly resisting it.
So that raises a big question for all of us, doesn't it? Can we truly embrace the inevitability of population aging and declining birth rates? Can we shift our perspective?
Can we stop viewing them solely as insurmountable problems and instead focus our energy on building genuinely resilient societies that can thrive within this new demographic reality?
And the evidence we've explored today suggests the answer is yes.
I think it strongly suggests yes. Investing deeply in human capital, as Finland modeled. Rethinking what work looks like at older ages. Enabling longer, healthier working lives. Strategically leveraging technology for unprecedented productivity gains, especially in areas like healthcare and automation, and fundamentally prioritizing health and well-being across the entire lifespan. These things can transform these demographic challenges into significant opportunities.
Opportunities for societal advancement, economic stability, maybe even a more balanced, fulfilling way of life if we manage it right.
Absolutely. It requires a fundamental shift in mindset, though. From seeing aging and lower fertility as just a problem to seeing it as a context within which we can build potential.
Okay, maybe one final provocative thought to leave our listeners with, building on all this.
Well, here's something that struck me from one of the studies we looked at. It suggested that improving financial literacy alone can mitigate the negative welfare effects of unplanned births by more than 20% for individual households.
20% improvement just from better financial knowledge around having kids.
Yeah, so imagine scaling that up. Imagine the collective impact if we had truly robust financial education widely available, coupled with those comprehensive, well-integrated support systems for families and individuals that we talked about, the childcare, the leave, the affordable housing.
What would that achieve?
It suggests it's not just about trying to incentivize more births. It's perhaps more fundamentally about making the decision to have children financially viable, less stressful, and supporting individuals to live the lives they truly want to live, whether that includes many children, few children, or no children, without facing undue hardship or sacrificing their own well-being.
So it implies a broader societal responsibility, doesn't it?
Thank you.
To empower people with the knowledge and the resources to make informed choices about their financial future and their family planning.
Exactly, creating a positive ripple effect of well-being and stability that could benefit generations to come, regardless of the overall population numbers. It's about quality of life and genuine choice.
A powerful thought to end on. Thank you for listening. See you again in the next episode.